No company worth over $500 billion has ever gained more than 25% in a single day. Oracle's stock increased by far more than that on Wednesday. Oracle Corp.'s stock rally on Wednesday earned it a place in the record books, as no company this big had ever before posted the sort of daily gain Oracle just did. Rocketed 36% in Wednesday trading. And while the stock has seen a couple of moves of that magnitude in the past, about 3 decades ago, the company was much smaller then. Oracle just recorded the first ever single-day stock gain of more than 25% for a company worth $500 billion or more, according to Dow Jones market data. The move is reminiscent of when Nvidia Corp's stock gained 24% in a single session back in May 2023 after the chip manufacturer's $11 billion quarterly revenue outlook topped the consensus view by nearly $4 billion. At the time, Bernstein analysts led by Stacy Rasgon called the guidance, by all accounts, cosmological. Nvidia was hardly an unknown name at that time, but the stock move opened investors' eyes to the company's position as the leader of the artificial intelligence wave. Oracle now has achieved some mind-boggling numbers of its own. The company said that its cloud business could see revenue exceed $500 billion in the next few months, and it disclosed 359% growth in remaining performance obligations or contracted revenue that is not yet recognized. The company finished the day with a $946 billion market capitalization, up from $686 billion at Tuesday's close, based on the updated share count in Oracle's latest 10Q filing. The $247 billion daily gain in market cap was the 7th largest on record for any company, according to Dow Jones market data. TD Cowen analysts said Oracle's report marks arguably the most momentous quarter in its history, although the headline financials were admittedly less impressive than the company's projections for the future. The massive commitments to Oracle Cloud infrastructure should solidify investor confidence in Oracle's dominance and differentiation when it comes to training AI models, the analysts said in a note to clients. They said Oracle's unique networking architecture affords pricing and performance advantages. The contracts also incorporate a significant amount of spend allocated to AI inferencing, which the analysts said supports strong long-term demand. See more. Oracle's stock surges toward its best day since 1999. These huge numbers explain why. Over time, Oracle perhaps sees more opportunity for itself with AI inferencing or running AI models than with AI training, the analyst said, in part because it can sell these services to millions of end customers rather than just to the top 10 or 20 major AI vendors. The $455 billion RPO figure that Oracle gave on Tuesday includes contributions from the Stargate AI infrastructure joint venture that includes OpenAI and SoftBank Group Corp. 1998-4. Re-ent 37%, and as well as from 2 other AI players, meaning revenues beyond 2026 go much higher, Melius research analysts led by Ben Reitzes said in a note on Wednesday. The TD Cowen and Melius analysts said xAI and Meta Platforms Inc. are likely the other 2 customers contributing to the reported RPO. Oracle's capital expenditure forecast, which Chief Executive Safra Catz said on the earnings call is expected to be $35 billion for the fiscal year, bodes very well for companies like Nvidia, Broadcom Inc., at which all have exposure to Oracle and Stargate and the inferencing boom, according to Melius. But there are questions about what all that spending means for Oracle's financials. The Melius team noted that the growth comes at a price as Oracle's free cash flow has gone negative and should be hurting for a while to fund the growth, though, admittedly, it doesn't seem to be an issue for now. Oracle has an Analyst Day coming up in October, and the big question then is, how low can margins go? The Melius team wrote, adding that Oracle could require debt raises in the future to fund its growth. D.A. Davidson's Gil Luria weighed in with some concerns as well. We're led to believe that at best, Oracle is operating their virtual machines or GPU rental business at single-digit operating margins, if not serving compute at a loss in some instances, he wrote, referring to graphics processing units. That presents a drastic shift as Oracle itself moves away from its 50% operating margin legacy business that could hinder earnings growth to single digits, even if revenue growth reaches the mid-teens.